This month, Kotak Mutual Fund will be completing 20 years of its operations. Let me use this opportunity to thank all investors and partners who have been supporting us all through these years. In the next few minutes, I am going to take you through some of the key events of the recent past and Kotak Mutual Fund's view on equity market. We Indians pray to millions of gods. We seem to have received blessings from all those gods in the past few weeks. Global macro environment that was putting so much pressure on our economy has eased significantly in the recent few weeks. Brent crude oil that had crossed $85 to a barrel has corrected to around $60 to a barrel now. This decline in crude oil prices should ease deficit burden on our economy as well as margin pressure on corporate India going forward. Over the last month or so, we have witnessed currency recovering from the lows. Now it is trading at about 70 to a dollar. The situation surrounding tariff war has also seen some cool off, at least for now. Locally, interest rate scenario has also turned benign. Consequent to decline in crude oil prices and stability in the currency, yields on the benchmark 10-year government security have fallen below 7.5%. Even though overall systemic liquidity remains in deficit, RBI has also been providing the much needed liquidity in the market through open market operations. With this favorable change in external environment, during the month of November, Indian equity markets recovered from the lows seen in the previous month. The large cap Nifty index rose by about 5%. Indian markets also outperformed their emerging market peers during the same month. In November, the foreign institutional investors turned net buyers of Indian equities to the tune of nearly $900 million, while the domestic institutional segment continued to be net buyers given sustained domestic inflows. While the macro challenges have eased to a large extent, the only imponderable for the market at this stage seems to be of developing political scenario in the run-up to the 2019 general elections. Going forward, the market is likely to be driven by developing political landscape and global cues. With sharp correction in 2018, mid and small cap stocks have now reached reasonable valuation levels and can offer decent upside if invested judiciously. With expectations of continued volatility in a pre-election period, we advise equity investors to make disciplined and regular investments with long-term in focus and not chase momentum in the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.